Patience pays when it comes to Bitcoin, my friends, and in today's video we're going to talk about why I stayed in my short and what clues I'm looking for on the higher time frames to indicate what is most likely to occur for Bitcoin next. Welcome to Bitcoin Escape Plan. If you enjoy the analysis, then leave a thumbs up and subscribe to the channel. And if you want a personal reminder of the levels that matter most every day in your email, then go subscribe at bitcoinescapeplan.com. Let's get into the video. This is an important one, guys. This is why patience is so important when you are trading with leverage on Bitcoin. And I'll specifically be going over this a little bit later on in the video on the 4-hour time frame. This part of the video, of course, being brought to you by my membership group, the 4-hour break room, which you can get more information about in the link in the description down below. So let's go over those targets real quick, and then we'll carry on into the higher time frames, which are really going to give us clues for what is the trend overall desiring at the moment for Bitcoin. So first and foremost, we've got a tag down here of the bottom band of the downtrend anchor VWAP. If you have no clue what I just said, go over here to courses. I explain it in more detail. That is one of the 3 most important targets that I continue to talk about in pretty much every video. It is slightly different level depending upon which time frame we're on. For the 4-hour in particular, sitting at about 63.9K. As I am recording this, we are sitting at about 63.8K. Now that's continued to fluctuate, but we did see a pretty massive jump down in the last 4 to 8 hours, roughly. Basically, these 2 candles have been pretty prominent downside. I did cover that with the 4-hour break room as it was happening. So if you want those updates, that's where to get it down there in the link in the description. So what does that mean? What does that mean now that we've had an interaction with that? Well, broadly speaking, what we're looking for is actually over here on the daily time frame. Let's go get our daily close yesterday. Our daily close yesterday and for the week was 64.8K, just below 64.9K, which in and of itself, not a bad thing, not necessarily a bad thing. So I had been talking about structurally, if we were gonna see a continuation of the upside, we needed to see it close closer to 65.3K, a close at 64.9 being below 65.3K. So structurally, that's kind of our first indication on the higher time frame. So we have a little bit of weakness, and what happened, into the overnight of last night into today, pretty violent downside. I remember on the drive home from San Francisco yesterday, I was not in profit. I was still in loss on my short, and now I'm in pretty healthy profit to basically the same amount of loss that I was in. I'm now in profit on this position, and I'm pretty much just waiting until we trend back towards this guy at 62.5K. Not super important to us today, but that is broadly speaking the next target that I'll be looking for over the next several days. And this actually is one of the more important points on the chart right now. I'm going to briefly touch on it and then I will come back to it later. But right here is super important. The last time that we saw something similar to this, guys, is over here in March, April. So this is the bottom band of the downtrend anchor VWAP. It is trending downward, clearly. The daily SMA was disconnected from it at the time. The daily SMA then rose above it, carrying the price itself above it. Now it is worth mentioning, the price itself carried above the bottom band of the anchor VWAP before we had an interaction with the daily SMA. So the price itself had to carry the daily SMA higher before an interaction and a crossover was possible. But what ends up happening is we start to see the daily SMA lose steam, and it starts to violently go to the downside as price violently goes towards the downside. What shape does this create? It creates another crossover for the price that continues to pull the price lower, and that one did resolve to the upside. Now, I have not ruled out the possibility, and I talked about this in the last couple of videos, there's a possibility that we can head towards 73.8K. I am still in the camp that is probably September, not August. I still don't really like that because it would create a higher low for us rather than a continuation of lower lows in the cycle, which is not impossible. Again, we got higher in May than we did in March. So it is possible that we see another one of those instances where we get higher at the end of August and into September than we did in July. Not impossible. That's not what the 2018 chart tells us. I'm not going to be going over that extensively in this video because, as subscribers are already aware, that is not quite as useful to us as it used to be. So we kind of have to start looking for new fractals to see if there's anything useful for us on the chart or not. But functionally speaking, what I am paying attention to now, again, is that just general shape of, does the price continue to carry below the bottom band of the downtrend anchor VWAP, or does it start to create some support, create some strength that allows the daily SMA to continue chopping? And we are seeing some more compression there on the daily time frame. So I'll come back to that a little bit later. Let's go over our higher time frames. Just let me check real quick to make sure I'm recording. I am recording, thank God. I had my whole screen up on yesterday's video. I didn't even realize that until I uploaded it. Anyways, what are the key targets that we need to pay attention to on the higher time frames? My friends, subscribers, you could already tell, you could probably teach a course on this by this point, because I say the same thing in every single video. We've got the 64K Fibonacci pivot. Why is the 64K Fibonacci pivot important, you may ask, new listener? Well, the 76.3K to 64K region we have been stuck in since the very end of January. I have talked about this in every single video that I have uploaded on this channel since February, basically. So broadly speaking, how I like to think about this is we want to pay attention to the middle of this range. The middle of the range being about 70.3K. And when the price is sufficiently below that, it is going to put pressure on 64K. When the price is above that, it will put pressure on 76.3K. We are well below that, sufficient to the point where we are actually in this next range. We have entered into the range between 64K and 44.3K. So what is the middle of that range? The middle of that range is about 53.4K, call it 54K, roughly speaking. So that's going to be our 70K of this particular region. I am still of the opinion that we do not see that in August. I know that there are a lot of channels that were calling for us to go down to 39 or 40 earlier. I think that was towards the end of June. People were very confident we were not going to get a July bounce. I was one of the few channels that was confident we were going to get a July bounce at that time. And I don't see that personally. I don't see that we're about to head towards 54. I do think we're going to head towards 57, but I don't have enough evidence to say that confidently anymore. You guys can really go over the last two videos. I go over that in more detail, where I'm really deeply looking for some type of historical context to allow for why the price is behaving the way that it is. But the 2018 correlation is really the only thing that is guaranteeing for me that we're heading back towards 57. Otherwise, I don't really know at this point. And I don't want to claim like I'm the sole arbiter of truth. You know, I'm a weatherman. Like, I'm sitting here looking at the indicators and trying to see what the weather is telling me for the price, essentially. And these, again, are going to be our key targets for that. So the 64K Fibonacci pivot, very important. This is basically like a gateway for us. We are either in this range or we are in this range. And it is important to pay attention to the reaction to the door. If the door itself is closed to us to go higher than 64K, then obviously, guys, we should be focused on targets below that, heading towards that midpoint, again, of 53.4/54K. Does that happen immediately? No, it does not. But if we take in the broad context of the monthly candles, so subscribers are already aware of this, how many green candles do we expect to see in a bear market year? Typically, we would expect to see between 3 and 4. We have already printed 3, meaning we have printed 75 to 100% of the green candles that we would typically experience in a bear market year. Now this one is a little funky. I don't really like this, that it seems like the TradingView chart can't seem to make its mind up on this. We closed the July candle at 62.8K, and yet somehow we have opened the August candle at 64.2, which I think is just putting real pressure on a gap fill at some point in this month. At some point, we are going to have a flush towards 62.8K, and depending upon how the price behaves at that time, it may be a much more violent flush, as I said, down towards that 57K target. Now, I would love that for my short, but I am prepared to close it if we show real strength at that 62K level. So broadly speaking, again, that's what I'm paying attention to. So what is our next key signal? Well, our next key signal is that bottom band of the downtrend anchor VWAP. That's the one I told you earlier is at about 63.9K, I believe, on the lower time frame, and it's sitting right just below the 64K Fibonacci pivot for us on the higher time frames. And you'll see as well, it just broke below that point. So what does that mean for us, guys? When we get a crossover like that, what that means is as long as the downtrend anchor VWAP continues to trend down lower, it means that the 64K Fibonacci pivot is going to form more as resistance than support. What do I mean by that? So over here, I was talking about this in April and May. Subscribers are already well aware of this. I've repeated this a million times during that time period. As we got closer to that 76.3K level, as you see, we get wicks above it. So I had called out 83K in February. It happened in May. I called it out in February. But you can see that whole wick of the candle there from 76.3K all the way to 83K it's a wick. It's not a full body candle. There's no evidence for us that that was going to carry higher. I remember having to stop listening to other channels. People who have more money with me, people who are better traders than me, were calling that range incorrectly. They were calling that we were heading towards 90 and 100. And anyone who is subscribed to this channel knew there was zero chance of that happening. Absolutely zero chance of that happening. So when we see a moving average flip below, which I believe this would actually be on the weekly time frame. Yeah, this was actually on the weekly time frame where we saw more evidence of that. So we saw the weekly SMA cross below that 76.3K pivot. So again, on the monthly, we just had wicks above it. On the weekly, we actually do have full body candle closes above it. Subscribers are already aware. This is the second longest time period that we have spent above the weekly SMA during a bear market year. So pretty important, and probably a big reason why we saw an initial rejection in July. You guys, if you've been following long enough, you remember I was calling for 73.8K at that time. We did not get it. We got rejected off the point of control. This guy over here at 66.9K. This is the point on the chart where the most human beings have pressed buy or sell. Very, very important. This to me is one of the most important tools that we have at our disposal. You go over here underneath forecasting, go to a volume base. You can use the anchor VWAP, my favorite squiggly line guy. And then over here, anchor volume profile. That's what gives you all of this data. Drop it on a candle of your choosing. Change your life. Have a wonderful day. Anyway, so same story on the weekly time frame as on the monthly time frame. We've got that bottom band of the downtrend anchor VWAP continuing to trend lower. So what is that going to do? It's going to do something very similar to how the weekly SMA behaved at that time, where the price can carry above it. There's nothing preventing it from carrying above it. This is a magnetic force, not a concrete wall, but this becomes a concrete wall. This will become a concrete wall the lower that the moving average continues to get pushed down lower to it. And I actually don't think that it's impossible for the weekly SMA itself to continue to get pulled down towards that 64K Fibonacci pivot, which once it finally does, it'll just be more confirmation for us on the chart that 64K is resistance, not support. So broadly speaking, what the chart wants confirmation of, I talked about this briefly in the newsletter today, which, by the way, go check your email once this is out. That will be done. It did take me a little bit longer today. I'm tired from San Francisco, guys. It was a great weekend for parkour. Anyways, that's what we want to pay attention to, is we've had the same story for 4 weeks in a row now. We had our initial rejection at the point of control. So this is our third target, guys. Remember 28 minutes ago when I said we have 3 targets to pay attention to? The 64K Fibonacci pivot, the bottom band of the downtrend anchor VWAP, and the point of control. Those are the 3 targets. However, we have not touched the point of control since that second to last week of July. Or last week of July? Second to last week of July. These 3 candles have retraced the same exact story. So we have, I wouldn't call that a rejection. We're not close enough to it for it to be a rejection, but we have a rejection of the bottom band of the downtrend anchor VWAP and the 64K Fibonacci pivot there. We have a retest at 65K, and the low of that candle is that 62.2K level that I talked about. 62 and 62.5 are the important support levels that we still have to pay attention to confirm whether we are still in an uptrend or in fact have resumed the downtrend. And that's really what I'm going to be paying attention to the next couple of days. As I've said multiple times in this video already, I am open to closing my short at 62K. Just so you guys are aware, my cost basis is around 64.5K. I took a little bit of loss as we were going up the range. And I don't mind. I'm okay with that. I've made back whatever loss I had on that, and I have a better cost basis. So it's more defensible, I think, to remain in a short from 64.4 than I think my average was like 63.8 before. So I would be at break even now rather than being in healthy profit at the present moment. So again, we want to pay attention to our local signals of support and resistance. That for us for support to the downside is 62 and 62.5K, and that for us for resistance to the upside is 65.7, 65.5, and 65.3. Really just 65.5 and 65.3 at the moment. We did not have a close enough interaction with 65.7 for that to truly be relevant to us, but we have now had 2 rejections at 65.5. So that is very important for us to pay attention to. And again, we confirm these as bearish, we reclaim them as bullish, and we have now confirmed them once more as bearish. So assuming that the week, this is Monday, so we got plenty of time, guys. Assuming that the week closes below that, I would imagine we get another push lower. So we would be returning towards these support levels. What are these support levels, you might ask? These are the only levels that I have drawn on the chart rather than letting a tool tell me. And that is the 2021 all-time high monthly candle closes. So this is the weekly chart, but just imagine that the candles close exactly at those levels, which they do actually on the weekly for a couple of them. But I like to draw my levels from the monthly time frame, not the weekly. There's just way more information on the weekly. It's a little bit more clear on the monthly, and we can still look at our wicks anyways. I feel like the monthly candle closes and the wicks are the most important data. I'm not really looking at the wicks at the moment. I mean, technically speaking, this wick here is 64.9K. So to me, guys, that's 65K. That's confirming 65K as resistance in this particular instance. And then this guy here, the peak at 69K. What is that really, guys? That's confirming that 70K is resistance at that time. And it's just a funny number to say. So crypto is still dumb at the end of the day. So we've got the peaks of 2021. Again, this being the first one, this being the second one. Just because a lot of you are watching this on your phone, that's 58.8K and 61.3K. So again, that's where we're going to want to pay attention to for potential support if we break that 62K level that I mentioned. And again, I think broadly speaking, there's nothing really preventing us from heading towards 57K. I do think that we find support at 57K. I do not anticipate we're going to drop much further below that. Potentially that 54K midpoint that I mentioned several times in this video and other videos as well. But I wouldn't say that's guaranteed. That wouldn't really be it would be a structural divergence, but it wouldn't be such a structural divergence that it breaks the overall trend for me. So broadly speaking, that is still what I'm anticipating, but I'm gonna let the chart dictate that for me, and we're just not quite there yet. This yellow line being a key support level in the monthly time frame in 2024. And it is important to note the bulk of our volume is in here, is the ETF buyers. So that's part of why we've seen a rise in this range, is because BlackRock has convinced new Bitcoin buyers, or / new ETF holders rather, suckers as they probably call them internally, to start buying now. Again, on what bullish news, I have no idea. Everything in the news for Bitcoin is bearish. I haven't seen a single one that's positive other than the ETF flows, and I wouldn't even say that's positive. That's just BlackRock convinced people to spend their money on a product that they know is going to go down because they need people to buy it, or they can't make any money off other people shorting it. It's, to me, there's no bullish signals on the chart, on the technicals, in the news, nothing. So I don't really see why we're going to magically move towards all those targets I talked about in the last couple of videos. That being, again, that point of control itself, the weekly SMA, and 70.3K, 73.8K, and by the grace of God, maybe 76.3. But I don't see that personally. I see a lot of other channels talking about 76. I don't see it personally. It would be off of a strong bounce at 62 is where we can maybe, again, maintain an uptrend instead of a downtrend, but that is not my base case. So let's go take a look at the daily one more time. So again, that shape that I was telling you guys about, where we see a crossover. So what happened in April, May? So in April, May, again, we saw the price carry first. So the price carried first below the daily SMA. That is what we're starting to see evidence of now. We are seeing compression, which means we will get a snap to either side within the next couple days, most likely. And I think that is largely going to be predicated upon, do we get multiple full body candle closes below the daily SMA, just as we were having them above the daily SMA. Now this is important to note as well. the two full body candle closes that we had above the daily SMA, look at those candles, guys. I mean, one was a Saturday, so I mean, sometimes it's just like that on Saturday. But what that's telling us is that people were really fighting to keep that level. They were really fighting to keep that level lower and not to have us break above 65.5. And again, did not even have an attempt at 65.7. So this is, again, not a clean downtrend. It's not a clean downtrend. If you were drawing a trend from here, it would have broken to the upside, and now you would need to redraw it. I don't really use trend lines that often. I'm trying to get better with them, but a lot of times I prefer the analysis that I do here with you guys on this video. Like, me talking this out, me trying to reason it out with you guys is, I think, more helpful to me a lot of times than arbitrarily having to continue to draw trend lines. Like, if you listen to the last two videos, I'm way more open to the potential of us going to the downside, and yet I remained in my short. I said that in the videos, that I wasn't ready to close yet. I was prepared for the possibility that I may be wrong and that I need to close it. What happened the next day, because I was willing to be patient, I am now in healthy profit again. Again, if you want to learn that strategy on your own, you can watch the video at the very end of this video, the Advanced Bitcoin Trading Course. I meant to mention this earlier on in the video, but this is the only strategy that I am trading now, guys. This is it. There is nothing else. There's no stocks, options, anything else where you can be wrong about the trade and still close the trade in profit. I have not found anything else that's like that. Altcoins are not like that. I had a 26x on SNX back in the day. I knew exactly what it was. I knew exactly why it would behave the way that it did. I still did not take profits properly. And that does me no good. It does me no good. Does you no good if you can catch a 20x and you don't know when or how to take your profits accordingly for that. So I think it's way better just to focus on one chart, the most reliable chart that there is, the Bitcoin chart, and continue to take leveraged action on what the chart is telling you, which again, I give that my whole game, an hour of game in that video. Advanced Bitcoin Trading Course. It's at the very end of this video. And again, anything else you need, link in the description, bitcoinescapeplan.com. So broadly speaking, if the price continues to carry lower, and it has tagged that bottom band of the downtrend anchor VWAP as well. So again, this is a downtrend in terms of the downtrend anchor VWAP, and that will pull the price down lower temporarily, though again, could find support at 63.5, could find support at 62.5 or 62. So I'm not convinced that we are just out and out done with this this potential move towards the upside. It's just not my base case, and it's not how I am currently leveraged. So I owe it to you guys to be honest about how I am currently leveraged. So take a look at the 4-hour chart one more time. Again, the only place that you can get a discounted rate, a trial membership, if you will, for the 4-hour break room is down in the description, guys. If you're subscribed to the email, you get it as well in the daily emails. But other than that, it's only in a YouTube video that you're going to see that. Everywhere else, you're going to pay full price, including if you go on the website. So go check that out. If you have any questions, you can let me know in the comments down below. But broadly speaking, I would not long this yet, guys. I would not long this yet. So subscribers are already well aware. One, this is not a kissing candle. This is a kissing candle. This is a kissing candle. Again, they call them tweezer tops, tweezer bottoms. That's lame. I call them kissing candles. That's what I'm sticking with. This is not that. This is the opposite of that. Basically, this confirms for us a continuation alongside the Bollinger Band rather than a mean reversion trade. So what I'm paying closest attention to, again, is we've got multiple 4-hour candle closes left. We got just under an hour left on this one. If the body of the candle closes below the 4-hour or the bottom band of the downtrend anchor VWAP, one of the first things it's going to want to do is retest it. Depending on its reaction there, it will continue its descent back towards that 62.5K target. 63 and 63.5 being little speed bumps on our way there. But this is a sincere period of compression that is really looking like it's breaking to the downside. We've now got two candles that are well outside of the body of the Bollinger Band as well, which could put some pressure on a swing to the upside. It could very well be possible that, again, in about an hour, that we could be seeing a kissing candle form for a move to the upside. That would be basically off of 63.8, which I don't think is quite as important. It is showing as an older Fibonacci pivot. It was important, it looks like, in this early run in August. Kind of important. Yeah, fairly important over here towards the end of July as well. So I'd be paying attention to that, whether we continue to break below that or not. I will continue to give updates in the 4-Hour Break Room membership. That's pretty much it for this one, guys. I'm really glad I didn't close my short, and now I just need to be patient. I will continue to talk to you guys about it, but broadly speaking, that's what I expect, is price wants confirmation of 62 to 62.5K as support, since it is now struggling to confirm 64K as support, and is kind of looking like 64K is resistance at the moment. Now again, maybe temporary. It's too early, I would say, to say that it is, you know, kumbaya, we're back in a downtrend. I don't think that that is confirmed yet. But if we get weakness at 62 and 62.5, that for me would confirm that we are still on track to be moving towards 57K, at which time I have no reason to close my short. I just have every reason to sit in it. I'm very thankful that I'm not wrong about this one. It's been pretty fun being correct about every trade since March. You know, March is really the only time that I called it incorrectly. So it would be nice for this to carry. But anyways, guys, any questions, comments, concerns, leave them down below in the comments. I will, of course, be back tomorrow. But broadly speaking, it looks like I don't have to do anything with my trade other than just sit and wait and collect profit on it. So any more information that you need on that, go to the Advanced Bitcoin Trading course that is tagged at the very end of this video, and you can learn how to do it yourself. Once you're ready, you can come join me in the membership. Have a wonderful day, guys. I'll talk to you tomorrow.